Welcome to today's event where we have the pleasure to present OrderYOYO. To help us through today's presentation, fully line up, CEO Jesper Johansen, CFO Jesper Hyveled, and Deputy CEO Mathias Thorn. Today's event will cover the Q4 trading updates. Looking at the numbers, good momentum continued as I look at the surpassing even twice upgraded guidance. So I'm sure you will get more into the details on what is driving that and the numbers. As always, it's possible to ask questions in the box down below. During the event, we will run through the presentation and the video will be shut off. So there's nothing wrong with your screen if it goes black on the videos. But after, on the Q&A, we will again return and take all the questions. But for now, I will hand the words over to you, Jesper.
Thank you, Michael. Welcome everybody to this presentation of our Q4 current trading, including our preliminary full year 2022 results. The audited annual report will be published on the 20th of March, but the overall 2022 figures are presented here. As Michael said, we have a full lineup. My name is Jesper Johansen. I'm the CEO of OrderYOYO, and I'm here with Jesper Hyveled, our CFO, and Mathias Thorn, founder of AppSmart and Deputy CEO in OrderYOYO. We all look very much forward to present our preliminary 22 results for you today, as well as the status for how the merger with AppSmart is going and how the market in general is performing. Mathias will talk you through the merger status, and Jesper will take you through the half-year results. Next slide, Michael. Just before we jump into the presentation, just 20 seconds on this slide. And next slide, Michael. Okay, let's start the actual presentation. Now, just before jumping into the detailed numbers, I would like to take a step back and reflect a little bit about our last year performance. 2022 was a year where we established ourselves as a European market leader for white label online ordering solutions for takeaway restaurants, a position we have defended and expanded during the second half of 2022. This number one position was obviously created through the merger between OrderYOYO and AppSmart in the summer of 2022. A merger of two great companies that we in the last 6 months have worked and focused on integrating. A big task that we work on every day and that we continuously will focus on. But I'm very proud of what we have accomplished in the last 6 months, and I do think that we are ahead of the merger plan we had originally. And I do think that we have proven that we have the capabilities to merge and integrate companies, which of course is crucial as we have an active M&A strategy. We raised our guidance twice since the merger was announced, and today we show that we've delivered ARR above the latest October guidance with an ARR of 212 million Danish kroner. This compares with an original guidance of 175 to 190, raised twice, latest in October to 185 to 200. 22 ARR of 212 million, translating to a 23% growth compared to the fully consolidated, so including AppSmart, ARR 1 year ago. In addition, we have been profitable for 6 consecutive months since July 2022, a very important milestone for us that we will continue to focus on. Lastly, we are now almost 300 dedicated restaurant liberators ready to take on 23. And I'm tremendously proud and grateful for what our entire team has delivered in 2022 in general, and in the second half of 2022 specifically. Next slide, please, Mike. Now, yeah, just a reminder on what this is all about. You've seen that these data in several slides earlier as well, but this is what this is all about. We liberate restaurants. So remember that 90% of orders of an average independent restaurant come from recurring customers. The restaurant needs to own that, and we help with that in a cost-efficient manner. This has been our value proposition from day one, and it has never been more important than it is now. It is actually pretty simple. Without a white label solution, the independent takeaway restaurant around the corner will die. Next slide, please. Next slide. Now, this is important. Since the merger, we have been the European market leader with strong, solid number one positions in the two biggest takeaway countries in Europe, UK and Germany. Now, market leader position is important for two reasons. First of all, as market leader, our muscle to communicate our value proposition and engage with restaurants is very big. In addition, the amount of money that we can invest in products to the benefit of all restaurants is so much higher than small players. So size matters both on the revenue and the product side. Second of all, size also matters on the cost side. We can provide our offering more cost efficiently because of size. So higher revenue and lower costs, that spells profit. And 212 million December ARR and 5 million plus the EBITDA for second half proves that. Next slide, please. And now over to you, Matthias.
Thank you, Jesper. Yes, I'm also very proud what we achieved as a team, and we are growing and we are growing profitable. And the numbers are good. An ARR of DKK 212 million and 23% growth, above guidance and profitable all months since the merger. So next slide, please. The organization grew together in the last 6 months, and I can say we are truly one team, which is great because it unleashes the full potential of the merger, getting things done right. I want to give you 2 examples how strong the synergies unfold. We introduced a marketing product which drives revenue for us and our customers in Germany, and it's a huge success. We are way ahead of our plan, and it is really well adapted in the German market. On the other side, for example, a technical implementation towards a global platform, which is going according to a plan and very important for us. But we also do all good improvements, like improving our e-commerce products, where we were able to improve dramatically our conversion rates and improve speed, which really gives us a positive momentum and a positive good business performance. Overall, we are in a very good shape, and there is still more potential and synergies we are about to unleash. Thanks, and I want to give the word to Jesper Hyvelud.
Thank you very much, Matthias. Please let me give you the highlights of our Q4 performance. So next slide, please, Michael. So our Q4 2022 annual recurring revenue, December 2022, as both Matthias and Jesper mentioned, reached 212 million DKK, growing by 39 million DKK, corresponding to a year-over-year growth of 23%. Next slide, please. Our December 2022 GMV, we reached 2.227 billion DKK, growing by 161 million, corresponding to a growth of 9%. Next slide, please. Our 2022 pro forma net revenue reached 184 million DKK, growing by 19 million, corresponding to a growth of 12% on consolidated pro forma 2021 net revenue. Next slide, please. So, as Jesper alluded to, we continue to have a clear focus on our profitability, and this path has become even more clear as we are now the market leader. We continue to materialize on this, and our Q4 EBITDA showing a profit of around 5 million DKK compared to a first half reported EBITDA showing a loss of 6 million. We have delivered positive EBITDA margins every month since the July 2022 merger, which is a clear focus for us and something we will continue to have a clear focus on going into 2023. Next slide, please. Now, when looking at our 2022 performance versus guidance, as Jesper also already mentioned, we have raised the guidance several times, and we have delivered final results above the latest guidance on both GMV and our annual recurring revenue. We are very proud of our 2022 performance and see this as the first proof on the successful post-merger activities that Matthias alluded to. One number I would like you to pay attention to is our final ARR of 212 million DKK. This is actually 16% above our average annual recurring revenue guidance provided just a little more than 6 months ago, so just post-merger. And again, something that all employees within OrderYOYO should be very proud about. Next slide, please. So final slide from my side. Just a remark that we will release our 2022 annual report by March 20, 2023, where we will share more details on some of the KPIs driving our overall 2022 performance. and we look very much forward to this. My part of the presentation is over now, so thank you for listening, and now back to you, Jesper.
Thank you, Jesper. Next slide, please, Michael. As I mentioned at the beginning of the presentation, 2022 is a strong platform for future growth. So the strong performance in Q4 has led us to rise our 2023 guidance. So GMV is raised to 2.3 billion-2.5 billion. ARR is raised to 220 million-235 million. Net revenue is raised to 195 million-210 million. And finally, EBITDA is raised to between 10 million and 15 million. The market is still very tough out there, as it has been for some months and quarters. But our strategy and business model work, and we keep taking market share, so our guidance for 2023 is raised. Next slide, please. Yes, lastly, I'm very happy to announce our proposal for our new chairman. Next slide, Michael. Victor Garcia. Victor, we are an international company, so one of the biggest wishes on the wish list was to find an international chairman with all the skills that we need in OrderYOYO. And we have found that in Victor. Victor is UK Spanish, UK based. He's a senior managing director at Stifel, a US investment bank. He's more than 25 years of experience in technology M&A transactions, with long experience of working with Nordic growth companies, and he has a deep relationship across the venture capital and growth equity landscape, as well as with global leaders within technology. Now, obviously, with OrderYOYO's strong consolidation agenda, Victor brings valuable insights and knowledge in OrderYOYO, and he brings strong knowledge and relationships with the international software industry in general, both in Europe and in the US. So we are very excited about Victor as new chairman, and he will propose on an extraordinary general meeting on the 27th of January, where all details have already been published. That concludes the presentation. Over to you, Michael, and the Q&A session. Next slide.
Yeah, then let's turn back to the Q&A part of it. We got the first questions here. Can you explain why ARR is growing faster than GMV? I think it was 12% and 23%, the numbers you gave up.
Good question. Let me take that one. Basically, that means that we are getting more out of each GMV kroner that we are taking through the platform. This is very deliberate and active work that we are doing on the pricing of our product. So in that sense, you could say that we in Q4 has actually been able to take more of the GMV for ourselves, basically because of the product that we are offering to our customers has increased. So basically, it translates into increased prices and better products.
Yes. Okay. So this is primarily a little bit on the price element that explains that.
Yeah.
Then there's a question to your 23 goal. Is it a goal to you're guiding on EBITDA? And is a goal to be profitable on net income in 23 or by end 23? You know, everybody is of course very focused on getting everything down to the bottom line. Will you some months or a period or something like that be able to show that in 23 with your current EBITDA guidance?
We're not specifically guiding for a net income. That's not a part of our guiding KPIs. But when that is said, obviously, as we have seen in 22, there is some seasonality in our business, which basically means that the second half of any year is always stronger than the first half, which basically means, and as we're going through the year, that we have aspirations to become net income positive in the end of 23.
And I also had a second question on that. Is it purely seasonality, or are you more heavy investing in the first half than in the second half? The reason why you also guided that you would be a little bit back end loaded in.
I think it's both.
In there.
It's both. Is the right answer. So we are investing. We are investing more upfront because there is definitely a market opportunity right now that we are investing into. We're doing it balanced so that we don't invest too much, so to speak, compared to what you probably do in the old days, to be honest. And then there is a seasonality effect in this as well.
Okay. Yeah. So it makes sense in your type of business, I guess, to front load a little bit the investments to have the effect of them in a full year. But that makes sense.
Yeah.
Yeah. I would just add that we still have a clear focus on investment in our product, in our customers throughout 2023 also. But as Jesper mentioned, it's balanced, and it has been critical for us to drive first EBITDA to a level that we think is fair with the current growth we have. But we have a clear focus on net income, even though we don't guide on it. So trust that we have a strong focus on not only EBITDA but also net income.
And then on the investment side, I guess you are also mentioning that in your report, and we will probably see more in your when you publish your results and deeper into the KPI results and so on. But you're still you mentioned that the EBITDA guidance still includes investments in I can't remember the words, but you are still investing in growth, I guess, and on your product side also including in that guidance. Is that correct? It's not just taking it down to leveling out in 23.
No. So basically the only thing, this is our guidance goes towards EBITDA before other external costs, and the other external costs will only be merger related costs. And we capitalize not more aggressively than before. It's the same level, and it's all related to future growth initiatives. So nothing has changed there. It's the same methodology and accounting principle, and we will continue that throughout 2023. And with that being said, we also have a strong focus on our cash flows. So trust that that's a target for us.
And then a little bit on the currency side, you are exposed to the British market and thereby the pound. I know it has stabilized a little bit, but what effect do you actually see from a falling pound? Do you calculate your ARR on this market in that, and would it have been even higher if we haven't seen the pound falling? Or a little bit elaboration on how that affects your results, the currency swing, especially in the British pound.
Yeah, let me answer that. So our ARR is based on a fixed currency. It's not an aggressive currency, and any adjustment to that will be made in net revenue. So yes, it's right. It's correct that we have seen a drop in the British pound throughout Q4, but nothing that has changed the guidance, and we are focusing on ensuring and also looking at hedging if necessary. But it's not a big risk for us, and we have been conservative when looking into our 2023 numbers. So we're not too exposed to this.
And remember, we have a lot of cost in British pounds as well.
Okay.
So from a net profit point of view or cash flow point of view, we're more or less neutral, actually.
Then how has the restaurant partners developed over the year? There's no mention on this in the slides, and I also think there was no mention on it in your trading update.
True.
Can you elaborate a little bit on it anyway?
Yeah, I mean, we don't give this as a specific target anymore, basically because this is also a way that we need to, or we are working internally. So we need to see these restaurant partner development in a broader perspective because they vary. And what's actually interesting for us is actually MRR and MRR churn and not necessarily local churn, which is the other thing. We are just below 10,000. 10,000 restaurant partners, which is actually more or less maybe a little bit higher, but more or less the same level as it was this summer, which basically translate into that we have seen local churns over the last 6 months. the market is still tough out there, and it continues to be. Number one. Number two, the restaurant types that we are now engaging with are becoming better and better for us. It's not that but there are some restaurant types that makes more sense for us, and we're focusing much more on that. So the estate is becoming better. We use restaurant partners more as a guiding principle. So we have this 25 and 25. So 25,000 restaurant partners by end of 25. That's still the goal, and that's still our vision and our leading star, so to speak. But on a day-to-day basis, we are more focused on what's actually driving through the single RP and not the number of restaurant partners per se, because this is actually one of those things, especially these days, where you can be too focused on a number that doesn't give any financial value. So we have internally also focused much more on making sure what's going through the restaurant and not the number of restaurants itself. But we're just below 10,000 restaurants.
And then you are taking market shares. Can you give some insight on what development you see Germany, UK? Is it broad-based, or is it in some countries you are taking the market share? And maybe also some elaboration on what is driving that. I guess you mentioned, it's your product portfolio, it's your power to actually keep growing and sort have that size and so on. But maybe a little bit of elaboration why you are seeing you're taking market share.
Yeah, let me start with the UK and Denmark and Ireland, and then I think Mathias, you can talk about South Germany and Austria. We are taking market share in all three markets, particularly in the UK, which is a big growth market for us. And I think that the reason for us doing that is actually a lot of stuff that I talked about the size slide we had earlier. That size actually matters now more than it has ever done, because at the end of the day, you need to make sure that you have enough power to communicate with the restaurant partners. You have enough power to do the products that make sense for the restaurant partner, and you have actually to be, and this might sound a little strange, but you have to have the courage to say to the restaurant partner, "Dear Mr. Restaurant owner, I'm helping you here. It's a partnership, so it's actually also something that will cost you something." Remember that there's a lot of small players in this market that do not have a product sufficient enough to capitalize and to ask for a price that they can actually make a profit on. That's not a viable business and a business model. We have to make sure that we can actually survive in the long run. And having those discussions, those partnership discussions, is paying off in the three north countries. Matthias, any specifics on Germany?
Yeah, I wanted to. Very, very well said, and I totally agree with you, Jesper. And I think the example what we used before, the marketing product, is a very good example for adding value and creating value for the customers. And when you are small, so we are as a big company, the size that matters is that we can deliver such products, and they are products which need to have a certain sophistication. So it's also advancing with the product. But on the other side, I can say from the development, we are market leader, and we are holding that position. We are extending that position. Our numbers and our data proves that, especially in the south. We have a very strong brand, and I'm very much let's say focused on that. We keep that and keep growing that, and yes.
And I guess just to make me understand, it's that maybe a lot of people can give them a payment platform, some of them can give them something, but they don't have the tools to drive their sales up, or you mentioned it, that you are actually driving pick rate up. If someone visits your site, they are actually going to buy something.
Yeah.
Is that what your competitors maybe are missing because of what your development are able to develop and actually support by the restaurants? Is that how I should understand it?
I think, yeah, that's well said. I mean, basically, we're building a machine here, a big machine, and obviously, we're more than 275 people in 5 countries. So of course, and we're almost 50 people working in product and tech alone. So the muscle that we can bring to a restaurant partner is basically all the knowledge of 275 people and almost 10,000 restaurants. So we're generating more than 10 million orders a year. So it's just, so you could compare that with a local player that that there's a lot of local players popping up during COVID, where, to be honest, this market was driving itself. So you really didn't have to do that much to make orders. Now you have actually to work for it now. So of course, we're a local competitor somewhere in Europe with 500 restaurants will probably have between 15 and 20 employees that will cover everything from product, tech, support, selling, marketing, customer success, onboarding, and production. That's basically 1 to 2 per function. That can never be efficient, and this is a business where scale matters, and it will increase more and more in the coming years. I think this is also why our strategy has from day one been that we want to become, we want to be market leader in Europe, but we want to do it by being market leader in each market. So we do have other companies in our space that have almost the same number of restaurants, are actually maybe 25 to 30% below. But instead of being in 5 countries, they're in more than 30 countries. For us, that's not an efficient model for us. We would not be able to get that working. You need a lot of cash to do that, and it's difficult to bring the value of knowledge and market participation to each and single restaurant. We can do that.
Maybe to add here, I think we speak about product, but there's also this operational excellence. I think we are performing, and this is what both organizations, and that's why the merger also fitted so well with both companies. There is the same mindset, and we are capable of being masters of our own fate. So we know exactly how to scale it up and how to deliver and get customers, onboard them, make the sales and all the process. And I would say we are very good in doing that.
Perfect. And then you leave it a little bit open, Jesper, so I need to ask, M&A targets, you want to grow like that, and now you're mentioning that some are struggling, I guess was what you kind of indicated, and capital is not easy to come at. So how does the M&A side look from your end of the table? And I'm not asking you to bring a list of potential candidates.
No, but it's not a secret that this is an important part of our business or in our strategy. So we look at M&A as an integrated part of our strategy. So we look at M&A all the time, and are also looking at targets, and we will do that every month. Every quarter, every year, the next couple of years. Things have changed since we did the merger. Since we kind of said in I think it was in Q2, we very much said to the world that we want to consolidate this market. We think there is an opportunity. I think it was actually at Q1. Then we did the merger with AppSmart, which was I have to say it's the perfect match in so many ways, and it was the perfect start actually, to be honest. But we've said that from day one. Now, 9 months ago, we needed to call people and start talking the M&A discussions, and it was a harder sell. Now what happens now is actually we get a lot of inbound. There's a lot of companies out there that would like to be sold to us. So the job has changed a little bit in the sense that we need to make sure that we do the right M&A right. so that we don't just do the ones that we get offered, but we make the M&A and the especially the acquisitions being the one that we need and can drive value from, because there's a lot for sale these days. There's no doubt.
And then last question: in which market do you see the biggest growth opportunities for 23? Is there some markets you mentioned that you're actually performing well in UK and I guess also in Germany? So is it broad based that you are actually still expect to see that? And then also a question here: how many POS implementations have you achieved outside Germany since the merger? You know, I guess one of the things AppSmart brought to the table to you is to integrate restaurants more by having a integrated cash system, the POS. So can you elaborate a little bit on the numbers, whether that's successful? And then secondly, where do you see the biggest growth opportunities in which market in 23?
Yeah, in terms of POS installations in the UK, this has we knew this from the very beginning, that's a longer sale. So the number of installations of POS systems outside of Germany is something that takes longer time, but we are actually doing installation. I've been doing that in Q4 and getting these things to work. There was some foundation part that we needed to do as well. So they're progressing along, according to plan. Still not big numbers, and have never been meant to be big numbers. They will increase in 23, but not the same numbers as we see in growth marketing products, where I mean, the South region is at least 6 to 9 months ahead of our regional plan in terms of filling growth fees. The execution in South under Matthias is impressive, and so that was kind of that part. And then to take the part about growth, yes, we do see growth in all markets, also in UK and in Ireland and Denmark. But I must say that the German market. And therefore, I want to leave the question also to Matthias, because the growth that we see in Germany is impressive. So the organization down there is doing our entire organization is doing a great job. But growth in Germany is impressive. So Matthias, just allude a little bit to the market situation in Germany and your performance.
Yeah, so again, we with very strong confidence and operational excellence, we can and we will deliver the results. Overall, I see in all markets great opportunities. I think this industry still has so much more potential, and this means also growth potential for us. Yeah, thank you.
Perfect.
We're being very modest, Matthias. I mean, the growth in Germany is
thank you.
Is very, very good.
But I don't have any more questions. And from the outside, so let's leave it at that tone. So thank you both to you, Jesper and Matthias, for taking us through this presentation, and for the audience for listening in. So may everybody have a nice day.
Thank you very much.
Thank you so much. Thank you.
Have a nice weekend, everyone.